probably one of the most important things that we talk about in EFXU regarding this is you have to be a different version of yourself, right? If you want to be a successful trader, for example, that is doing this full time and you've quit your job, the current version of yourself, when you enter this, just like when I entered Forex, this space, that current version of myself was not capable of what I'm doing now. So I had to work on that new character. I had to develop and create this new character, this new version. You 2.0 is what I call it. And you got to think about the habits that this new character is going to have that's going to make it effortless for you to actually achieve those things. What bad habits is this version of you free from? What mindset characteristics and beliefs does this new character of yours have, right? That's like the first fundamental step. Creating new beliefs, creating new habits, and all these internal things, which then will reflect the external. And then again, a big part of it is just how you organize your goals, right? Like if I started like initially, the way that I do it, and I'm sure everybody does this differently, I write out certain things that I want to do for, so for example, Joe Bogdan and I, we do this quarterly, and then we do it to start the year, and we talk about things that we want to accomplish as a unit, as a company, long-term goals, right? And then what we do is we break that down by the metrics and by the numbers, and we break it down into quarters, and then we map out a strategy of actually how we're going to do it, right? So it's not something like I want to be a successful trader in 12 months. It's breaking it down in terms of how you're actually going to get there. And you can do this in terms of pyramid goal setting. Pyramid goal setting is a really good one as well. And kind of a good analogy of that is like, think of it like, and we'll get into the lesson in a second, but it's just super, super important. Think of it like, I use this analogy pretty frequently in terms of like goal setting. Think of it like, somebody that's trying to exercise and be healthy, and they're trying to change their diet and, whatever it is. And let's say their goal is, I want to lose 150 pounds in 12 months. If that is the sole focus, you're going to lose your way, and it's going to be it's going to be very easy for you to get distracted and get off that course, because that goal, especially in times where you might be struggling or facing temptation, right? That goal is going to seem so far away and unattainable that something small like a cheat meal doesn't seem like that big of a deal. And then that can throw you off and bring you down this path that's just, gonna self-sabotage your efforts in trying to achieve that goal. And what you need to do is you need to break that 150-pound goal down into individual steps. Like take 150 divided by 12, right? What's that number? Anybody got a calculator? What's 150 divided by 12? Like 12, something like that. Let me do a calculator. It's got to be like, well, it doesn't matter. It's probably right around 12, 13, give or take. So let's say you have a goal of 150 pounds that you want to lose in a year. It would be breaking it down into 12 months. So 12 and a half. All right, so I was close. So it would be, I'm going to lose 12 and a half pounds on a monthly basis. And then you can break that into weekly goals. You can take that 12 and a half, and then you can divide it in 4. Right? Talking about the 4, sometimes there's 5, but we'll just call it 4 months, 4 weeks and a month. So you're talking about 3 and change, right? 3 pounds and change, right? Now that seems more attainable, right? And when you go into a restaurant, for example, right? Or let's say like you're super, super busy. Like that's when I usually would slip up and kind of eat crappy, is like when I'm super, super busy. And then, I just want to eat really fast, right? If you're in a situation like that, and you're focusing just on the big goal, maybe the goal of being a successful trader, just the goal of losing 150 pounds, that's going to seem like, okay, this meal isn't going to make a big difference in reaching that goal. But if you focus on that goal broken down, and like I said, in 4 weeks, where it's like 3 pounds, and you're thinking of it, okay, I need to lose 3 pounds this week for the next 4 weeks to lose 12 and a half pounds, right? And then do that repeatedly and consistently. And then those small goals will start adding up. and accumulate to reach that big goal. And when you're faced with, I'm going to lose 3 pounds this week, that cheat meal can be the deciding factor of you achieving that weekly goal or not. And then it becomes much easier to make a decision to stay away from that when you're focusing on that big goal broken down. And that's how I've always approached my big goals. That's how we just did it when Bogdan, Joe, and I met last week before Christmas. We have our big goals of what we want to do as a company. And we broke those down by the numbers in quarterly basis, a monthly basis. So we know exactly what we got to do in January and for the first quarter to be on track for that goal. And then there's actions behind it of, okay, these are the numbers. Now, what are the systems and the processes and the approach that are going to enable us to reach these goals? And that's just how I always do everything. Why it's my goal, what I'm going to do to achieve this goal, and then break it down and plan it. And that's how you take a goal and make it something that's actionable, that you can take action on consistently. Thought you meant 250. All good, man. All good. The numbers really didn't make too much of a difference. It was just kind of, example sake. And of course, too, there's so many things that tie into that, right? Like there's the reason why, right? Like that's probably one of the biggest, why do you want to lose that weight? And then if you're, actually capable of achieving that goal too. A lot of people make goals that they're not physically or mentally able to actually achieve, right? So it makes it easier not to accomplish that. But having a purpose, the why, the real true reason why, right? It's why a lot of companies succeed and why companies don't. A lot of anybody see what's that guy's name? Senek, the TED Talk. And he talks about how these big companies like Apple and Amazon and all these huge companies and how they're completely dominating the space. And it's because they lead from the inside out, right? The why to the how, and why most companies lead with the how to the why. External to the internal. So if you lead whatever goal it is, or you're trading or whatever it is, why you want to do something from the internal out, from the why to the how, right? Why you want to do it? Well, he breaks it down in terms of the way that your brain works, your limbic brain, and it's extremely powerful. And that's why a lot of people don't achieve what they want to achieve, because they're just focusing on the how and just what they want versus why they want those things. And if you have a powerful enough why, combined with a plan that's something that you can take consistent action on and have accountability and all these different factors, you're just going to be a beast and you'll be able to accomplish anything that you really put your mind to. But anyway, enough of the blabbing. I just kind of felt compelled to talk about it a little bit, just because, we're reaching the end of the year. We have a couple of days left. It's December 28th right now, man. It's just crazy. It's just crazy. The book I was talking about is Atomic Habits. So there's a 4-step process to changing habits. And start with Why by Simon Sinek. It's really, really good. It's a really, really good video. I talk about that stuff in the modules of EFXU. It's just really, really powerful stuff. And that's why, I've just to understand how powerful that is. I am not the luckiest guy in the world. I am not the smartest guy in the world by any means. Barely graduated high school. The only reason why I did graduate high school is because I played sports. Only got into community college, and that was also because of sports. But how am I able to achieve these high level things, right? Multiple 7-figure businesses, a multi 7-figure trader, right? That's not because I'm the luckiest guy in the world, right? Think of that, right? And if you can look at these patterns of these people who achieve high level success and what it's really rooted in, it's habits, and it's usually rooted in why they're doing something. If you have a purpose that is intense, the how is just not an issue, right? When we started EFX, we didn't know how to run a business like this. We didn't know how to do so many things, but we just did it and figured it out, and then got ourselves in a position where we could get mentorship from people who were above us to show us how it works. And every single mentor that we hire, every single advisor that we hire, says it all the time that they love working with us just because of our work ethic and because we've always led with why we do it. And that's how we've grown this company. That's how I've been able to, do what I've been able to do in trading. And it's going to be the deciding factor or X factor in your future if you have a strong enough why. And I'm not talking about I want to quit my job or I want to make a lot of money or whatever it is, right? I want to buy a Lamborghini. Those aren't reasons to do anything. Those are materialistic things. Those are a byproduct of success, right? Those things just, that's money comes with success, right? But that can't be the reason why you do something. That's not going to be the reason that you get out of bed every morning at 4:30, excited to get busy and take consistent action. So it's just super, super important. Like it's, people think that trading, like, what I'm about to show you guys today on this lesson, like that's what's going to make you, bring you high level success, 6-figure accounts, quitting your job, right? All the money in the world, that brand new Mercedes that you want, whatever the heck it is, right? What I show you on the charts isn't going to do it. I can promise you that. That's not going to be the deciding factor. You starting an online business, you starting an Amazon store, whatever it is, right? If it's fueled by financial gain, materialistic things, you're not going to achieve what you want to achieve. That you're not going to achieve that high level success. What these other guys are doing, these multiple 6-figure, multiple 7-figure months, it's just none of them lead with those things. They lead with why they actually are doing it. And that's going to be what takes you to where you want to go. That I can promise you. That I can promise you. So those are some serious things that you need to think about coming into 2022. If you're really serious about changing your life and the direction or the trajectory of where you're headed, you got to really think of those. It all starts internally if you want the external to change. And this was a big part of me getting clean and sober. This was a big part of me turning my life around. This was a big part of me having success as a trader and a business owner. It all followed that pattern. So just really important things to think about. All right, so what we don't want to do on this session, there was somebody in the group, I think his name was Brian, and I believe it was on Sunday. He dropped a question in the Facebook group and he was asking about market structure, and he was looking at a specific pair. I think it was Euro Odd. And he was just asking about, some basic market structure questions. He posted a chart saying like these were some of the areas that he was getting confused about. So what I thought it would be a good idea, I commented on his post and I said that I'll either post a chart and kind of give like a little breakdown, or I'll do a video and we can dive into market structure, directional bias, how do you determine directional bias from a higher time frame standpoint, and then how you get that alignment on those lower time frames, those intraday time frames on a weekly, on a weekly basis. And I forget what the other part was: directional bias, market structure, and top-down analysis. All those things are very closely correlated. So what we're going to do is we're going to touch on that. We'll pull up that pair and I'll break it down and we'll go through that and all that good stuff. And hopefully that can give you clarity, Brian, and then, everybody else that might be struggling with those things. Sound good? I wonder if he's on. I tagged him in the post. Brian, you on? If not, he'll just see it on the replay. 20 minutes past the hour, mic drop, we out. Yeah. All right, so I'm going to share my screen and we can break down Euro Odd. Euro Odd, I just pulled this up. I had a markup on this recently. I didn't take this trade, but there was a really nice 4-hour signature on that. And we can see what else is cooking up. So let me pull up my screen. Okay, so let me check something really quick. Let me know if you guys can see my screen. I want to pull up his post. So he said, guys, I get confused with trend. Where is the trend on this between which numbers? He kind of threw some numbers on some highs and lows, 1 through 5. He goes, I don't know which leg to look for in terms of trend in order to determine the direction to trade. Please help. Thank you so much. And he posted a chart. He had a down arrow from the 1 leg to the 2, and then he had a 3 leg to the 4, an arrow going up. It looks like a support resistance level maybe. So we'll break that down and hopefully give you and everybody else some clarity. Okay, you guys can see my screen, perfect. So first and foremost, if you're on a 4-hour time frame, I believe this is what he had marked up right here. So he had this, he had like the 1 here, 2, and then I think maybe 3, that's not a good looking 3, and then a 4, and then a 5. So he had an arrow down like this, and then he had an arrow up like this, and he just wasn't sure of the direction based on the structure that he was reading of which way he should be looking for. Now, one thing I do want to make perfectly clear, right? When you're looking at trading, right, it's not about being right or wrong. If there's so many times where people come into something, like there were a lot of people that said, you know, it's bullish and it's bearish and all these things, right? Everybody's going to have a different approach. Everybody's going to see the market differently. And what's important is that you build a trade plan that is tried, tested, and proven to produce consistent results, right? It's not about being right or wrong. It's just being able to develop a trade plan and being able to follow it. So that is why, you know, you could have multiple traders who are doing this at a higher level, consistently profitable, and you could pull something up like Euro odd. And you'll have people that will have buying opportunities. You'll have people that will see nothing there, or maybe something that might be setting up. You'll have people that are selling opportunities, whatever it is, right? So if I'm talking about something that doesn't necessarily or specifically line up with what you have marked up or what you believe that's going to happen, it doesn't mean that I'm right and that you're wrong. And that's a big trap that so many traders fall into. So if I mark something up right now that is against what you're talking about, Brian, or other people that might have been looking for buying opportunities saying it's bullish, and I, you know, end up saying that this is bearish, right? Just don't look at it like you're doing something wrong, because I could be wrong at the end of the day. And that's the difference between a successful trader and somebody who does not have the consistency. I know that I don't have to be right in order to produce profits in the market, right? Let that sink in. We don't focus on being right or wrong. And I know I don't have to be right or wrong in order to produce. I don't need to know what's going to happen next in the market in order to produce consistent gains. And that's the beautiful thing about trading. And when you realize that, it can forever change your trading. So let's dive into this. So first and foremost, you are not going to be able to really get a clear picture looking at the 4-hour time frame. Yes, that is a higher time frame, but it's not the time frames you want to start on. Think of it like reading a book. Another analogy I use very frequently. If you just open up a random book, right? I don't have a book here, but I got a magazine. I got a crypto magazine. Just say this is a book. If I just open up to a random page and I read these 2 pages, and then somebody says, tell me what that book's about, I am not going to be able to do that. If they ask me, what is that chapter about? I am not going to be able to tell you what this chapter is about by reading these 2 pages. If you pull up a single time frame, like if I look at the 4-hour time frame, that's like reading a couple chapters, right? If I go on to a lower time frame and I'm just looking at like a 5-minute time frame or a 1-minute time frame, that's like reading a couple words or a couple sentences, right? You're not going to be able to get the full story of what's going on. And that's why you're not going to be able to accurately know the direction. So you have to start on a higher time frame and then work yourself down to those mid time frames. And until you have consistency, I really recommend going lower than 30-minute, 1 hour. There's really no need for it. And when you go lower, it's just going to create a lot more noise. So you want to quiet that noise. And there's a couple things that we can do. We can use a line chart. That is a tool offered here on top here. Let me put my mouse highlighter on. And it might make, I'm just going to clear this chart and we can kind of get back to it. That's the 4-hour signature right there that I was talking about. They look pretty nice. Let me get the mouse cursor on. Boom. All right, so what we're gonna do is we need to start on a higher time frame. That is the only way that we're going to be able to know the full story here of what's going on, and then we can start working down to those mid lower time frames, right? And again, we're not going to go anything lower than like a 1 hour, 4 hour, because we just don't need it. When you're determining a directional bias, you should be able to accurately do it from the monthly, weekly, daily, 4 hour, and then 1 hour or lower. It's just at that point, it's not determining a directional bias. It's about working in entries or re-entries or stacking positions, or, you know, kind of getting interstructure plays. And we just, that's a whole other topic for another time. So in order to understand the whole story here and determine if this is bullish or bearish, because this is all that was shown on his chart. It was an arrow going down like this. Can anybody tell me, just looking at this chart, if he had it like that? Can anybody tell me, looking at this chart here, right? And this is from August to this current day. Can anybody tell me if this is bullish or bearish? Is it possible? What is the current structure? What is the current environment that we're looking at right here, right now, on this time frame? This is a 4 hour time frame on Euro AUD. What's going on? Bearish, but why? How do you determine it's bearish here? And if it is bearish, how do you know that it's not just a higher time frame retracement? For me, I wouldn't be able to accurately determine that it's bullish or bearish from this time frame. And here's the line chart that I was talking about too. That's pretty messy in terms of, you know, the directional bias. But when you use a line chart, it's very helpful because it's going to quiet the noise. It removes all the wicks and it focuses solely on close price. So that is a tool that I really use all the time. It's a tool that I recommend. And it should be your best friend. Yeah, so like you really don't know without looking on the higher time frame first. Like, you know, if we're talking about this, like on an intraday perspective or like a weekly bias, maybe we can determine that this is bearish. But how do you know that, you know, this right here isn't a strong move up and that this is a pullback on a higher time frame and that this is just going to turn, right? You just don't know that. You cannot determine a higher time frame directional bias just by looking at this. So we have to start at the higher time frames. More importantly, just structure is not going to determine where price is going to go. We need to understand targets, and we need to have multiple reasons for price to travel somewhere and feel confident about it, right? Just because we're seeing bearish environment here with some lower highs and some lower lows, right? Where is price going and why? And what makes this bearish, right? If we don't know where price is going, nothing else is really important. So we have to have targets. So let's start on a monthly time frame. And another big thing, when you approach these higher time frames, monthly, weekly, you need to mark these up like you would with any other time frame. And I've talked about this all the time, especially in EFXU, as structure and directional bias is just one of those things that people struggle with all the time. It's just, that's the thing that people just bang their head against the wall about all the time. So what I do is I recommend marking this up like you would a 4 hour or a 1 hour or a 15. People are afraid to dive into weekly and monthly timeframes because they're focused on time. They're looking at the bottom and they're like, okay, this peak right here back in 2008, how does that have any significance to this current price action? Most people load up a chart and what they're focusing on, right? His 4 hour candle or his 4 hour chart was this, just a little piece in there. How is just focusing on that little speck of sand right there on this big scale going to help you determine where price is going to go? It's not, right? So we have to understand that everything here, if you want to read that whole story, we need to understand this whole thing, okay? So what we can do is I am immediately drawn to this price action here. This is significant, and I will tell you why. Okay, so we can see price over here since its birth. We can see price just move sideways. And when it started moving sideways, it created this low and this. Why are these significant, Dan? This high and this low were the all-time high and all-time low before price started just moving sideways and creating this range here. Price from February 2000 to right around 2008, for 8 straight years, it just moved up and down in this range. And then all of a sudden, we see a massive breakout coming up, and it attacked this all-time high that was established, right? So we can see we had kind of very similar to this over here, where we had, some lows, some equal lows established. We had a high established. Price ran on the lows, then ran on the highs, and then that's where we saw this consolidation here, and price just moved sideways here. And then that's where we have this all-time high up here, and this all-time low. And then out of this range here, we saw a massive push up running on this high here, taking the all-time high. And then after it took that all-time high, we can see a massive dump off, right? We can see price started selling off from the top of, or the end of the year. It was 2008 in November. And then it ran all the way down to this low that was established in August of 2012. That is a huge 4-hour impulsive move on a monthly scale. And when we saw price run up, it took the top of this area here. It ran on the all-time high, capturing liquidity, and then just melted, attacking the all-time low, right? So what we're seeing here is what? What are we seeing here, and how can we use this information? Right? We have a big signature pattern here. We have a monthly signature pattern, right? We had a signature pattern, right, is basically where we can see price ranging. And this is significant because this is building liquidity on the highs and the lows, right? Liquidity building on the highs and the lows. And the signature pattern is something that will do this: run on the highs and then attack the lows. Or vice versa, something that will run on the lows and then attack the highs, right? Attacking support and resistance. A lot of people think they're getting stop hunted or unlucky on these situations, right? These are breeding grounds for manipulation, for smart money, big players, institutions, hedge funds to fill large quantities, large volume of orders. This has to happen, folks. You have to recognize that. These areas are generating liquidity on purpose. Manipulation is the way that they're getting these orders filled. So we have a massive pattern here, and we can focus just to show you the accuracy and how something back in 2008 is very significant. So what we're going to do here is we're looking at this candle here. And the reason why we're focusing on this candle here is because this is that last up candle before price started melting. And I'm going to draw a horizontal ray from that. And we can see a couple things here. We can throw our fibs. Let me change those fibs really quick so everybody can see it. I just got to change the template here. 1 second. If it lets me. Okay. So first thing I'm drawing fibs on is this swing high to this swing low. And we can see price now started working itself back and came all the way back up into our kill zone, which is the 71 to the 886, and pinged this monthly candle here. This last up candle that was capturing this all-time high before running on the lows and capturing this all-time low. Look at the accuracy on a candle from 2008. It pinged that candle, that top candle there, and then immediately started breaking down. Okay, so what I would look at here is I am now able to start finding targets. I can see this low here. I'm starting with the lows, right? And I'm going to market target. Okay, and now we can see this area here. We have relative equal lows in this area, break retest level. So I'm going to take this area here. And then the next area that really stands out to me is this set of equal lows here or support level here, because we know what traders are doing on this level here. Traders are looking, and if you don't know what retail traders are doing, very simple to figure that out, because the real thing that you want to understand in trading is the herd mentality and understanding the roller coaster of emotions. And where most traders are buying is in these euphoria areas, or same thing with selling. And what we want to do is, in layman's terms, we're observing the masses, observing the herd, and we want to look to do the opposite, right? So what you can simply do is just load up TradingView. And then if you're not sure what the majority of people are doing or areas that might be building liquidity, you can simply go to TradingView and search the pair, right? If we search euro odd, I can almost guarantee you, without going on any other time frame, if we can find some markups that are showing daily or weekly time frames or monthly time frames from maybe some position traders or swing traders, we are going to see them mark up this level as significant support. And that's going to do what? Offer buying. If that's offering buying, what is that doing? What does that mean? That means that there's massive amount of liquidity building up under these lows. What is that? How is that significant? Because that's what we want to target. That's how we get in alignment with smart money. So again, let's just take a look. And I honestly haven't loaded up euro odd, but we can just take a look. How do I get to see ideas? I think that might load a pair. Okay, here we go. Is there a way that we can filter the time frames? Does anybody know? Let's just see. This is a 4-hour. That might be it. Oh, that's a 30-minute, so that's not it. That's a 1 hour, so that's not it. 4-hour, 4-hour. Here's an 8-hour. We might not see higher time frames. Here's a daily, but that doesn't show it. They got a support resistance level here. Does anybody know if I can filter the time frames? Smart money trader right here. He has that 4-hour signature that I marked up as well. But I guarantee you that's probably in alignment right here, these levels here. But we can see it's mostly support, resistance, and trend lines here. But if we can't find any higher time frames, I don't want to waste too much time doing that, but we can just go back. So what I'm doing here first and foremost, right, is we're looking at structure. We're looking at the higher time frame story. So right now I can see we have a higher time frame signature pattern. This area here that tacked these all-time highs and made this big signature pattern. Right, this was a pullback here, and we can see price retraced all the way back up to the origin of that area that started this move, and we saw a sharp reaction. Now, after I've identified 3 significant higher time frame targets, I want to go on lower time frame and build an agenda that supports this or is in alignment with this. Before I do that, I want to go to a line chart. We can also quickly take a look here at the monthly structure. So we can see here price closed below here. We kind of have some manipulation where price ran on these lows here before running up and taking these highs. We can see some monthly higher highs, higher lows. Here is a significant swing point here, a monthly higher low, swooshed up, closed up here after taking that wick up here and pinging that area, giving us our high. After that reaction, right, from a logical area, we can see a strong push down that broke structure. And now we can see some bearish structure starting to form here. So I'm definitely paying attention to this area here, right, these areas here. And I want to dig into this structure here, back on the candles. Okay, so now that we're in these areas here, I can see a couple significant things. Looking at this is primed to come down, in my opinion. Just looking at this before we go any lower, this is looking primed to come down. We'll dig into this. So first and foremost, that structure point here, this one is very significant. Anybody tell me why? Can anybody tell me why this area is of significance? Why is this area here significant? And remember, here's our structure point, right? We're talking about this high to this low. Yeah, we have manipulation here. And if you can't see it, I'm going to zoom in a little bit. Right? And we're focusing even on higher time frames for our points of interest, that structure, which was started or initiated by manipulation. So you might be asking, well, how do we know that was manipulation? Typically, when manipulation is identified, it's in the form of price running on a series of highs or lows, followed by a strong impulsive move, creating a lower low or higher high. And we have that here, and also broke structure. So we'll probably be able to see it a little bit easier on a weekly time frame, but we can see this is 3 months of liquidity building in this range here, lows and highs. We can see price here pushed above all of these highs, capturing this liquidity here. We can draw an X on top there for liquidity captured. And then we had all of these, and that's where you'll have trend line draw, you know, people throwing stuff like that up here. Right, we have these lows here. Why isn't that drawing it here? Well, either way. So we can see price ran on these highs, followed by a strong bearish engulfing candle, which ultimately led to this low. So we have a very significant structure point here. Here is our swing high to we're drawing our fibs down to that low here. This is our point of interest. Let me get those fibs a little bit tighter on there. We can identify our kill zone, which is our 71 to our 886. And we can see after this push down, price rebalanced and retraced back up into this area. Very similar to what I just showed you on this right here is almost identical to what I just referred to on the monthly, where you had a breakout of the range and then price made a strong push down and price rebalanced, retraced back to that point of interest before breaking down. This right here is exactly what I showed you on the monthly, where it went like this. Captured that all-time high and then went all the way down and then retraced to that monthly and then started breaking down. That's what we have here. Okay, so now we can dig into this. I'm going to mark that up on a monthly time frame. We'll make this red for selling, just so we can easily identify that. And we want to label things. So when you pull up a chart, when we mark up these higher time frame things, right? You do this once and then you have all these things, but you want to be able to make your job easy and label things. So we can do monthly manipulation candle, right? And then we can also dig into this. Like I'm talking about prior to this, it's just we've already done this. Price has already played this area, but we can dig into a weekly time frame, see if there was something there. Nothing too clear on a weekly, but you can see that manipulation here a little bit easier, where that range price ran on the highs, then ran on the lows, creating this massive set of equal lows, break retest, support level here, which becomes a massive target, right? That's our first primary target. So back to a monthly, right? And we found all of this information so far just on a monthly time frame. So if anybody tells you that these higher time frames are not important, they do not know what they are talking about. We just accurately determined direction, higher time frame picture, multiple targets, points of interest. You know, look how much things we've identified on a monthly time frame, right? So right here, what we're seeing is price came up into that area and saw a strong reaction, right? It didn't give us a lower low yet, but we're still trading within this range, right? So we're still, in my opinion, just based off of this information, which you would have only found on a monthly time frame, we're still selling, right? Here's our structure, retracement, and then that continuation. And you'll see this all the time, where price might start going and it comes back up, captures liquidity on some of the highs on this move, and then continues down and makes that lower low, Rarely you're going to see a perfect market like a lot of these people that want to draw examples where you just see, you know, that perfect move down, retracement, and then it just goes, when in reality, price is more doing stuff like this. Right? Running on highs, making you think it's going, getting you to move your stop loss too early, running on that high, and then going. Like it's very common price action. But we can see this area here. Let's start dropping down. Okay, so here we can start identifying some structure on a weekly. So this bearish structure here, when we see this bearish structure, this is identifying the impulsive move after the manipulation here, right? Our swing high to our swing low. When this structure breaks, that is representing the retracement. So we can see this high here, price broke that high, and now we started seeing a series of higher lows and higher highs back up to the kill zone. When this structure breaks, knowing that we are trading inside this internal structure here, these two internal structure points, the start of the manipulation that created the lower low, right? Until we get a break of this high or a break of this low, like we're trading, this is, in my opinion, we are looking for sells and sells only, unless you're in a buying opportunity that you're aware of this situation, you're aware of this structure, and you're looking at maybe some type of counter short-term opportunity, whatever it may be. But right now, what I'm seeing, just based off the weekly and monthly, we have some pretty black and white price action here. So when we see this structure here broken, that's signaling retracement. This retracement here, when we get that break of structure, which we did here, that is signaling continuation. So here is the continuation structure here, push down, break a structure. Now we're seeing a retracement, and it looks like it played back up into that daily, weekly candle here, and it looks like we're getting that continuation move here. So we can flick back onto the candles and take a closer look. Everybody following along so far? And again, like, we didn't get too much information here on the weekly, right? 90% of like what we just talked, or just about everything that we've talked about, was from the monthly time frame. From the monthly time frame. Okay, so here, very similar to the price action here, right? That monthly manipulation candle, very similar to that other monthly candle that we saw the reaction to up here, this monthly candle up here. We're seeing something similar here. We can see a strong, aggressive push up. And when we have that happen, we're getting a lot of liquidity here, right? Under all these lows, right? People buying in this. When people are buying, they're putting their stops under significant lows like this. We can see price run on these relative equal highs here, play into that kill zone monthly candle, and then push down and break structure. And then we can see a strong impulsive move down. So we can see price retrace back up into this candle here, and now we're seeing a continuation move. So in my opinion, we are in the continuation to push down, come for this low, also relative equal lows. We can see those here. Try to get perfect equal lows here, perfect equal lows. And then we have the bigger set of equal lows here. So what do we know? We have short-term targets in alignment with higher time frame targets. We have higher time frame structure in alignment with higher time frame targets. So what we can do now that we can see price push back up, and we can also throw our fibs on this move here as well. Swing high to this low here. My computer's lagging a little bit. That's why it's a little choppy like that. We can see price again pushed up into this kill zone here inside of this candle. Let me take a look at what that candle looks like on a monthly. There isn't one. Daily, let's take a look. Really nothing there. Okay, so that structure there, this is kind of the price action that he had marked up. One thing I can kind of see here is a impulsive move, ABC correction, which is also kind of a little bit off. I think it's one retail based patterns that kind of is in alignment with smart money, where you have X to the A, which is the impulsive move, A to the B to the C, ABC correction gives us our D point, which creates harmony in the market, also representing bearish price action here as well. Okay, so that's really not too important right there. I don't expect many people to, you don't have to worry about what I just showed you there. It's just a little bit of confluence. I was a harmonic trader for a number of years. I've studied the patterns. I can identify them pretty easily with my eye, but just added confluence that I noticed there. So one thing here, right? We saw that play into that daily, into this new kill zone. We're starting to see price break down. I'm going to look at time and price. I want to look at some weekly highs, some weekly lows. These yellow lines here are the only indicators I use are all time and price based. These yellow lines are representing weekly price action. So all of this price action between these yellow lines, that's a week worth of price action. Same with this, this, and this. This represents a month of price action, these four here. Okay, that's what I use. And then I also use time and price, which is the sessions, which represents Asian, London, and then the overlaps for New York. So one thing I can see here, when we start digging into this, we're now on the time frame that he had posted. I'm going to get this off here. Okay, so let's take that off for a second. So once we saw price push up here and play into that weekly candle and into that kill zone and start breaking down, we had this pattern here, right? And if you haven't started to notice how powerful these patterns are, it's just really incredible. We've seen it on two different perspectives on a monthly time frame, and now we're seeing it here as well, where we can see a range here. This is just probably one of my favorite patterns to trade here. People like to trade these ranges very frequently. You know, you'll look for support, resistance, right? You'll also have this level here, right? You can see these highs with this low here, and you can drag it over here, right? And it looks like support resistance. And what happens too is these are very similar to the ranges that I also demonstrated earlier, where they're buildup of liquidity. So when we see something like this and price breaks out of these channels, naturally what traders are automatically thinking is buying, right? You have this support here where price has shown this channel, which is technically considered a reversal pattern in terms of retail traders. And we can see a breakout of that pattern. And the way that these are traded is, one, you're buying on this support. If you're buying this support level, your stop loss is going somewhere under this level here, under these lows, under this level somewhere, okay? If you're trading this reversal pattern here, right? And again, I am rarely ever, so I use higher time frame manipulation candles like I pointed out on the monthly time frame for directional bias. I'm using those for points of interest where we can see price trade into and then look for lower time frame patterns like so. So we can see price trade up into that daily candle and then started breaking down. And then we can see, you know, if I saw this, I would say, okay, I can see potential manipulation setting up. If you go back a couple of Tuesdays, I showed this exact example on a GU trade. And when you see stuff like this, it's just kind of observing what the majority of people are doing based on how the majority of people are taught how to trade. Support and resistance and trend lines and indicators and these different combinations of MACD and RSI and Bollinger Bands. And it's all different combinations of that built with patterns and channels and head and shoulders and very, you know, it's what people are taught to do when they come to the market. And when you kind of look at that perspective and you understand that this is the majority of where people are trading and looking for opportunities to buy and sell and understand what's kind of happening there, right? If everybody's looking at this support level, I'm kind of trying to think of, okay, where are areas that we can anticipate manipulation if everybody here is buying? And that comes back to that last lesson I talked about in terms of where can price go that's going to hurt the most people, right? And when I talk about that, what I mean by where can price go that's going to hurt the most people is where can price go that's going to stop out and make a bad day for a lot of people, lose their money. So that for me would be under this level here, especially now if you're trading this support level, again, stop loss somewhere under this low. Down here on a pair like euro odd would be too far. If you're trading this pattern, typically the way this pattern is traded is you look for a breakout, which we have here. And then you're looking for a support resistance or maybe a retest on this level, something like this. Breakout, come back maybe on this support resistance level, or maybe the back on this level here, and you're looking for something like that. If you're trading that pattern, if this is the way that you typically trade, where are you putting your stop losses? Also under these lows. So the majority of people, and we can go back to euro odd and we can kind of take a look. What are people doing? How are they trading? Right? We can see, look, that's the exact thing that we just marked up. Right? That's the exact thing that we just marked up. Right? Support resistance. Right? He's looking for, it'd be nice to retest, looking on this level here. Well, it actually looks like this guy is kind of incorporating smart money as well. If he's talking about a 4-hour order block here, but he's got that kind of look like support level there. He's got resistance up top. Again, you can see it here. That's the same level that we were just talking about. We can see plenty of these levels, right? You can see here, trend lines, right? All of this stuff is just the majority of people trading like this, and it's very easy to get an idea of where price can go to hurt the most people, right? Support level, you got the patterns here, right? All of this stuff, right? So when you see something like this, and where people are putting stops, for me, running on these lows here, running through the stops, that would hurt the most people. And if we get that pattern, we're also getting a signature pattern, another range where price runs up, takes the highs, and then takes the lows. So let's run it out. And this was the markup I had prior to the start of this. So you can see price starting to push up off that level, probably enticed more people. Now you got a double bottom forming, and then we can see price run through it. Okay. So when you see that pattern, now we have manipulation, and now you have a point of interest here. Again, the last up candle here before the down move, attacking the lows. So now all of those stops are attacked. Retail pattern failed. This would now be the most logical spot to sell here. First short-term target here, that low, then these lows, and then these lows down here, and then ultimately these lows down here. There's the entry off of that candle, respected candle, and then we can see price starting to break down. It'll attack this low here. There it is. And then this brings us to current price action just in a minute here. Okay, so looking at what we have going on here, does this make sense to everybody so far? Everybody following along? I know we're talking about a lot here, but this is how you determine structure and directional bias and how you're able to put all of these things together to form a setup that has a high probability of doing what you anticipated to do, right? If you can understand the targets, if you can understand the higher time frame, big picture, right? And make sure that you have all of these things in alignment, right? We also had, if you follow smart money, we also had a big thing here that also said no buying here, right? What also, in looking at this price action here, suggested price coming down further. Can anybody pick it out? When we're looking back, kind of like what I was looking at here, this pattern that enticed retail traders, from a retail perspective, people that have been with me more so for a little bit more length of time, maybe somebody who's not new to the computer or new to the community, they wouldn't be able to spot this. What is one other thing that we would factor in here that would suggest price running on these lows and coming down? Can anybody spot it? Perfection, absolutely. It is. It's poetry on the charts. But I'm sure you'll have some people in here. No, in terms of smart money, what's another thing that we look at? Yes, Mia, imbalance. We had imbalance in this area here, which imbalance can act like a magnet and draw price to it. And it can also be the catalyst for impulsive, strong, aggressive price action. So we had imbalance, and I got this little indicator here. This one's also, this is imbalance finder. It's just a tool that makes it easier so you're not marking up all the imbalance. Somebody brought it to my attention recently, and it just makes your life a lot easier. So we can see these yellow lines here. That represents imbalance from this strong impulsive move underneath this low. So we have liquidity building here, and we have this imbalance, which is under this area for smart money traders. This is a no-go because we can anticipate price being pulled like a magnetic force down to fill this imbalance where price was only traded up here, and we can anticipate balance in the market by price coming down, trading to this area here, which is exactly what happened. Run on the low, right? Like I said earlier at the start of this video, you want to have multiple reasons for price to go somewhere. So just looking at this, if you saw this pattern setting up, which if you saw, I had the markup here. I didn't trade it. I just don't follow this pair. We had those major equal lows. We had this retail pattern, which suggested running on this low. We had all of this imbalance here. We had these equal lows here, right? That's multiple reasons for price to do what? Come here. Make sense? So you want to have all of these things, short-term, intraday perspective and higher time frame perspective in alignment. And what you're building there is a very high probable directional bias. And then this can be something that you test on your own, and you can see how that works out, right? So just beautiful price action here. It just doesn't get, Euro AUD is just a really solid pattern in terms of, or excuse me, pair in terms of this type of price action. Euro AUD's kind of always been one of my favorites, but yeah, so now we can take a look at this price action too. If we want to take it a little bit step deeper, let me throw this on. Yeah, and again too, the reason why I use these, the other reason why I use these lines here for weekly areas too, we also have, when we saw this move up here, test this manipulation candle, this was also confluence here, right? For price coming down, attacking this low. It wasn't not only the low, but it was the previous week low. So previous week highs, previous day low highs, monthly as well. That is also stacked onto that confluence. And we can see if we look at time and price, and we look at this pattern here, let's take this off. Let me see something here. Okay, so let's take a look at this. Not the cleanest, but it's literally, you can see how this plays out over and over again, right? You got some resistance here, break retest level. This probably enticed sellers here, right? That's a very common way to trade. If you go look at trending markets, if you go Google this right now, trending markets, how to trade trending markets like this. This is how they teach you how to do it. That's literally how they teach you to trade. Look for these levels where a low is created, price trades back up and then breaks it, and then look for that confluence of a trend line and resistance. Watch. That's literally how they tell you to trade. Forex trend line support resistance. Images. Let's see. We have an example here. It's got to be an example somewhere. I'm trying to find one that has both, not just one. Like this. Here we go. That's literally how they teach you how to trade a trending market, right? That's literally this. That's like what we're seeing here. So this right here brings in retail traders here selling. And then what do we have here? We have price spike up, right? We can see this area here, building liquidity. So if you're looking at this, you can anticipate just recognizing these areas. If you are not sure how to trade with these concepts, just being able to identify where retail traders are getting into their opportunities, that alone can say, okay, this is something I do not want to be involved in, because I can anticipate manipulation. I can anticipate a run on that high where everybody else is selling off of very standard, popularized support resistance trend lines, and I can anticipate that. And look what happens. Price runs on those highs right when you think it's starting to break down, or people might think, okay, it broke trend line and maybe buying. If that was the case, either way, highs and lows both taken, right? If anybody's buying this trend line, they're putting stops under here. We can see that also get taken. So what do we have here? What do we have here? It's just when you would see these patterns and you approach the market with a different perspective, you know, it'll be a light bulb moment for you, and you'll be able to really accurately figure out what's really happening and how to form setups that, you know, can produce some really nice risk to reward trade setups too. What do we have here? This one isn't as clean as the other ones that we saw, but and this candle here might make me a little bit hesitant, but we do have a signature pattern here. I'm sure there's a little bit of a lag, but we can see that we have a very similar pattern to this, where run on highs, low, test that candle here before continuation down. We can see that here off of this, just kind of a textbook retail support resistance trend line area. We can see manipulation here before giving us that low. If that wasn't a 4-hour candle here, 4-hour bullish engulfing candle, I would most likely be looking at an opportunity inside of this candle here. But either way, we're going to keep this, yeah, signature pattern for sure, for sure. You could probably dig into it a little bit and work in a candle. We got that 1 hour up here. That could be a spot that you pay attention to here, the London high, right? We can see price ran on Asian high and previous day high, then ran on Asian low, and then this low here. It's just, these are just patterns that happen pretty consistently. So we're going to keep it to directional bias. We're at the top, we're 10 past the hour, so we're running a little bit longer. But that's the breakdown. That's the breakdown. And I hope that gives you clarity on finding directional bias, understanding market structure, and how you can accurately determine where price is going to go and also produce really good risk to reward. So does that make sense? Anybody have any questions about this before I stop sharing my screen? Some really good price action based on what we're seeing here. Based on what we're looking at on a higher time frame, the weekly and monthly time frames, I am bearish here. I am bearish. We have really nice targets here. We're trading inside of this range here after this manipulation up here that created this low, giving us equal lows here. You know, we're going to see price start breaking down. We're going to see price run for these lows and then these lows. We will most likely have a bearish trend for 2022 with Euro odd. That is my prediction before we start the year. But hopefully that helps. Brian, I know you might not be watching this, but I tagged you in this. Let me know if you have any other further questions. And I'm going to stop sharing now. We can run through any questions that you guys might have, and then we can wrap up this call. Glad to hear you, Danny. Thank you. Absolutely. You're welcome. Stress-free trading by just knowing what the big boys may do at these areas. Yeah, I mean, that's part of it, but the real stress-free part of trading is knowing that you do not need to know what's going to happen next in the markets to make consistent gains. That is the light bulb moment. That was the light bulb moment for me, right? Because so many traders, one of the biggest traps when we talk about trading is righting wrong. People want to only trade A+ setups, and people hate being wrong. People want to be right, and then they bring that mindset into trading. And when they are not right, or if they see, you know, there's so many things. There's availability bias, there's loss aversion, There's trading not to lose, right? There's so many aspects of it. But the biggest part about it, just like I said earlier to start this call, I can show you this stuff all day long on the charts. I can show you how to mark them up. I can show you how to determine a directional bias. I can show you how to find entries and manipulation and all that good stuff. But that's not going to mean that you're going to be a profitable trader. That's not what it takes to be a profitable trader. That's probably 20% of the big picture strategy. And most people think it's 80% and then maybe 20% risk management or capital management, maybe a little bit of mindset sprinkled in there, when in reality it's determining, or not determining, it's developing a trader's mindset in certain beliefs about the market. There's just so many things that, a top 5% trader, the characteristics that they hold, right? Their mindset, thinking in probabilities, the casino owner mentality, not worrying about being right or wrong, all these different things, right? Being disciplined, being patient. That, my friend, is when trading becomes stress-free, right? And if you want to look into a little bit more, Mark Douglas, right? The 5 fundamental truths of trading in terms of probabilities. It's just really, really powerful stuff. And then that's what's going to take you to the levels that you want to go with trading, not the chart stuff. Charts and strategy is important, but it's not as important as the things that we just talked about: the mindset, the psychological aspect, managing emotions, how to deal with fear, right? Fear of loss, fear of failure, fear of being wrong, fear of losing money, fear of missing out, all these different things. Those are the real things that you need to work on. And that will make trading stress-free and a lot easier. I'll check the recording later for sure. At a tournament today and tomorrow. All good, man. All good. No problem. No problem. So we're 15 past. Any questions? Any questions before we end this call? We still got a decent amount of people on here, but we can hang out for like 3-5 minutes if you guys have any questions regarding anything that we're talking about today or anything in general. If you have any questions. Other than that, we can just wrap it up. And we'll probably, next time we meet, will be in 2022, next Tuesday. We got New Year's Eve on Friday. Yeah, is it Friday? Yeah, New Year's Eve on Friday. Great session, Danny. Thank you. Thank you, Danny. Good stuff. Good stuff. Awesome. Awesome. If you guys got some value from today's call, drop a fire emoji in the chat. And if you have any questions, we'll hang out for another couple minutes. I'm not seeing any questions come in, so maybe I just did my job really well, or, don't be worried about, any type of stupid question, or if you think it's a stupid question, right? It's just, if you have a question, if you don't understand something, take advantage of this time. Great value. Thank you so much. Awesome, awesome, awesome. Well, I'm not seeing too many questions, or any questions for that matter, so we can probably just wrap it up. Anything Thursday? No, we will not be doing anything Thursday in here. We're doing EFXU members. We are meeting on Thursday instead of Friday. Typically, we will meet on Fridays, but because of New Year's Eve, EFXU members, we are going to meet on Thursday, and we're going to be doing the markup session, which I'll be dropping the info for that inside that group. So you guys should, if you're in that group, which I know you obviously you are, you guys will see a post from me at some point today, giving you the information, the details about the pair that we're going to review. And then we will do that session, that markup review session, and we'll probably have Merkel on there as well with me. And we will do that on Thursday. I think I said 10 a.m. It's either 10 a.m. or 11 a.m. Where can I find information on EFXU? Are there any mods in the chat? Or Andres, are you in the chat? I can have Andres reach out to you. I will tag Andres now. Okay, I just tagged Andres, or you can reach out to Andres. I just tagged him in the chat. You can click on that and shoot him a message. He's one of our team advisors, and he can give you some information and help you get plugged in on all that good stuff. I plan or will commit to attend more live Q&As. Awesome. Yeah, and we're going to be doing more stuff too. And we got when I met up with Joe and Biden, we were talking about some really good ideas that we have for masterminds and more things that we're going to do in the group for EFXU. We got a lot of good stuff happening. Yeah, so the live Q&A is on. No, we're just talking EFXU right now. Those Friday sessions that we normally do, it's this week. It's going to be on Thursday. This week it's going to be on Thursday just because of New Year's on Friday. You guys, the members voted on it, and they just said we're going to scratch last week because of Christmas. It's just that time of year where it's tough, where you got Christmas and Christmas Eve, and then right after that we have New Year's on top. So it's just a tough time of year for a lot of people, and it's a lot of people usually just like to break it off until the following week into the first week of New Year. So. Right, but in this group, what are these? So no, these are just sessions that we do. This one was kind of just answering a member's question about directional bias, and usually do that on Tuesdays in here. How do you determine which pairs to review? Do you have certain pairs that you analyze, and do you look at all of them? So good question. And no, you don't want to look at all of them. You can use the scanner. I used to use the scanner pretty frequently. Some people like to use the scanner as a starting point, and you can. There's free scanners out there. There's paid scanners. What I usually recommend for people, especially like members in EFXU, is take 5 to 7 pairs max. And trading, think of it like this: when you're trying to start out and you're trying to figure out what pairs you want to trade and the patterns and things that your strengths and weaknesses and all that good stuff, think of it like you're putting it through a kind of like a funnel, like a filtered funnel. You're putting a lot of things out, and then things will get filtered and funneled, and what comes out at the end would be your strengths and things like that you're extracting, right? And you're making changes. So people might start with 5 to 7 pairs. And I usually tell people 5 to 7 pairs, no indices, no metals, no cryptos, and not too many pairs that are correlating. So you don't want to have like 5 pairs and all of them be US majors. So I would just focus on less. There really is no rhyme or reason to it. It could be, you could pick 5 pairs, and 2 of them might be majors, 2 of them might be GBPs, a couple might be JPYs, and then you might see that you're getting really good results with the majors and not so much on JPYs, and eliminate the JPYs and focus on the majors. I trade 2 pairs primarily. Gold is my primary. US 30 is kind of my next pair, and then I watch EU GU, which are essentially like the same pair. But I didn't just pick these pairs. I kind of arrived at them. My trade journal and my back testing suggested that these pairs are my strengths, and they just fit my personality. So it's just kind of like a combination of things. So I would just, a couple of good ones, maybe Great Britain, New Zealand are good ones to start with. CAD JPY, another great one. Euro AUD, another great one. You can throw in Euro USD, you can throw in GBP USD, and there's 5 pairs to focus on right there. Less is more in trading. When you are looking at all of these different pairs and you're just going to spread yourself way too thin. It's impossible to keep tabs on all of this. Then you're talking about management and execution and exit. Less is more in trading. Most consistently profitable traders I know who do this at a high level focus on 3 pairs or less. Most of them, 1 or 2 pairs. I know a guy that just has consistently made money from EU and EU alone. Merkel is the same thing with EU. That's all he trades. And I know another guy that's been trading for, when I first started, he had like 6-7 years already, and he was a multi-6-figure trader. All he trades is EU as well. Even to this day, it's all he trades. But yeah, you can use a scanner if you want. It's just not necessary, but at the end of the day, it's finding what works for you and just keeping things incredibly simple. That's like my motto with everything, like my approach to everything trading related. Keep it stupid simple. It goes on my calendar right now. Thanks. Absolutely. No problem, man. Sorry about that. I misunderstood when you said Q&A, and I also know you're in the EFXU group, so I thought you were mixing up the days. That's my bad. All right. So I think we can wrap it up there. I don't see any other questions. So if you have any other questions, feel free to just drop them, message them under this video. We monitor this, the moderators and other advisors, everybody kind of gets notified on all of these notifications. So, we can come back and answer these questions at any time. If you don't feel like asking them and getting the answer on a live, you can just drop them and, we'll respond to you, or you can message us and we can see what we can do to help you. So other than that, that's going to be it for this week. I think we do have a couple things that we might be dropping on Thursday. Nothing live video like this related, but we might either have like a training video, or I forget what else we might have. We got a couple things cooking up, but once we get back into the new year, 2022, you'll see consistent stuff from us pumping out 2-3 times a week in this group, mindset related snippets, or just a bunch of different stuff to just help you and find your way with trading. So until then, next live session that we're going to be doing in this group is next Tuesday, which I'm not sure of the date, but I believe it's the 4th. You guys might correct me if I'm wrong. Yes, so it's Tuesday the 4th. So I probably won't be too active to the later half of this week. Bogdan as well. He's traveling to Florida for New Year's. So just be patient if you don't hear from us right away. Just with all these holidays and end of year stuff, everybody's just extremely busy. Other than that, I hope you guys all have a great New Year's Eve and New Year's Day. Stay safe. Don't drink and drive. Love you all. See you next year.